JJ the CPA here. Hope you're doing well. I'm going to do a skim over, update, little refresher on some hit items that are going on right now. Here's what I'm going to cover. I am going to go fast and furious, but in the body of this video, you're going to find a link regarding every aspect of this so that you can go directly to the source. So each one of these items I'm going to cover quickly, from PPP, PPP forgiveness, the EIDL, the grant, targeted grant, supplemental targeted grant. Talk about the first and second stimulus checks. Why? Third stimulus check. Why? There's a fourth one? No, but we're going to talk about the advanced child tax credit, as well as the increased child care tax credit, the employee retention tax credit, as well as the sick leave family tax credit. So with that being said, PPP, it ended May 31st. The thing to note, though, is that if you've not been funded, they are still processing until June 30. They stopped taking new applications last month. Get no false hope. You would already need to have your application in. But the encouragement to you is that you get with your bank, make sure things are progressing, because they are behind the scenes still working through June 30 on PPP forgiveness. If you got PPP 1.0 in 2020, then it is time to go ahead and file for PPP forgiveness. Those of you that got PPP this year, doesn't matter if it's first draw or second draw, if you got PPP in 2021, you need to call timeout and not file for PPP forgiveness. Get your PPP 1.0 in 2020 forgiven. You need to give it time. I'm going to give you a link to the SBA website that makes it crystal clear, no matter what your bank's trying to tell you, that the PPP forgiveness application is not due until, you ready for this, the date of disbursement plus your covered period, which is 24 weeks, plus 10 months. Anybody that got PPP in 2021, your PPP forgiveness application is not due until next year. For those of you that want to cross it off your list, the reason to wait is that while I don't think there's going to be more PPP to come, we did see this year those that had filed PPP forgiveness previously on some aspects were on the outside looking in. So be patient. Take care of PPP 1.0 forgiveness. I'm going to give you a link related to that. It's on the SBA website. The thing to note, though, for the self-employed is that you're going to file Form 3508S. Typically, if you didn't have employees, the amount that you got is less than $50,000. So you're going to file that Form 3508S. You're going to put in the amount of your PPP loan. You're going to take the amount that was your Schedule C and divide it by 12 times 2.5. Here's the key to note is whatever formula you used when you got PPP, that will be the same formula that you use when you put in for PPP forgiveness. But that was a trick for you, because for those of you that got PPP this year, self-employed, you're not filing for forgiveness yet, especially for those that got it based on the net, because while I don't think it's going to happen, why put yourself out of the running by filing for forgiveness of 2.0? So you just need to wait. But for those of you that haven't filed for PPP 1.0 and that forgiveness, you're self-employed, 3508S, couldn't be simpler. Going to give you a link to that. Those of you that got less than 150,000 of PPP, you don't have to provide any documentation with your application for forgiveness. You still need to meet all of the specifications, so I'm going to give you a link to that. I'm going to have some additional videos. I've got a number of playlists related to PPP forgiveness. Now on the EIDL, it's up to 500,000. You probably know that. Have you requested that of the SBA if you need it? If you haven't, then go to your portal. You may have sent the email. If you didn't get a reply from the SBA that you can now ask for an increase, log in to the portal where you would go and get information about your original EIDL, and I bet your bottom dollar you're going to find there an automatic option to request more. I've got videos on that as well as a playlist that you can check it out. Now, related to the EIDL and the increase, the thing to note is that if you're getting more EIDL, that falls under a 2021 disbursement. So the key difference is that in March of this year, the SBA came out and said that if you got a PPP, scratch that. They said if you got an EIDL in 2020, the deferment period to make payments and for interest to accrue is 24 months from disbursement. If you get it, an EIDL or an increase in 2021, then on that amount or on that loan, then you have a deferment of 18 months. The interest rate on either year is 3.75 with a repayment of 30 years. Now, with loans, yes, you're going to have to pay it back. With the EIDL, it's not going to be forgivable. But when we're talking about the EIDL grant, the thing to note is it's over. They're not giving out any more EIDL grants. But the key word is targeted grant. They are giving out the EIDL targeted grant, which is up to $10,000. They're also then doing what's called the EIDL supplemental targeted grant. You might see a lot of videos or articles talking about $15,000 grant. What that's referring to is that the targeted grant is up to $10,000 and the supplemental grant is $5,000. The key thing on either one of these is that you needed to have applied for an EIDL last year, period, the end. The second is that you need to be in a low income community. So I'm going to give you a link to the SBA website, to the EIDL section of that. I'll also give you a link to the part of the website where you actually look up your address and then you can see if you're in a low income community. So the thing to note is if you didn't apply for an EIDL last year and or you're not in a low income community, these two grants, the targeted as well as the supplemental targeted, is not going to be something that you can take advantage of, unfortunately. Now also with the SBA, they have announced that you can start making payments if you would like on your EIDL. So even though they're deferred, like I had indicated, I'm going to give you a link where you can go and set up your account with the government for you to make payments when you're ready, because you can make them early. Something to note is that it's a Form 1201 payment. So when you go to the website, the link I'm giving you, you'll see how to make 1201 payments. Well, that's where you make an EIDL payment. The thing to note is that information about your SBA loan, interest rate, repayment terms, etc., will not be on what you're setting up on the website to make payments. So these things are segregated. The SBA, you still log in to get information about your loan, but you don't make a payment directly to the SBA where you would log in to get information about your loan. You would make a payment directly to the government on the other website. So you can obviously mail it in, but I'm going to give you a link so you can jumpstart, at least get that set up for yourself. Now, why would we talk about the first two stimulus checks? Well, if you have filed your 2020 tax return, be sure that when you filed, you included in the calculation the amount of your stimulus checks that you got, 1 and 2. So they started sending out number 1 in April of 2020. Of course, that paid out throughout the summer if it were delayed. Then they did stimulus number 2 that paid as early as the very end of December. They stopped paying that at the end of January of 2021. So the first and second stimulus, if you didn't get all of it, when you file your 2020 return, that's when you get the rest. Good news on that is that if somehow you got too much when you file your 2020 return, that's then determined. You don't have to pay any of it back. So if you had someone help you with your taxes or you did it yourself with the software, go back and double check that included in that calculation of your tax credits, you did shore up, if you will, to ensure that you got all of the tax credit for 1 and 2, in essence, as the stimulus amount is now being reported on the individual tax return. So let me be clear on that. Stimulus 1 and Stimulus 2 checks, they're reported on your 2020 tax return, not because it's taxable, but to ensure that you got all of it. If you didn't get all of it, it then becomes a tax credit on your 2020 return, reducing down your tax, and it's refundable at that point. Now, for the third stimulus check, the thing to note is that the IRS is pretty well waiting until you file your 2020 return to then send those out. Some of you may have gotten them. The key indicator here, though, is that those that qualify for this are not dependents. What I mean by that is that the parents claiming dependents are the ones that are going to get the stimulus for the third round, if you will. Meaning, if you have a college student, or you have a student, or you have somebody that you can claim as a dependent, they themselves do not qualify to get the stimulus amount. Now, maybe people found a way to go ahead and file. I think there'll be some repercussions known as repayment on that. So the thing to note on that is that for the third stimulus, get your 2020 tax return in, and then you will get your, if qualifying, the amount. Now, the fourth stimulus, there's a little bit of confusion on this, I think, and depending on who maybe you're getting your information from, some are calling it the fourth stimulus check. It's not. There's no fourth stimulus check. There is no fourth stimulus check. What you're hearing about is something called the Advance Child Tax Credit. And here's what that is. The new law has increased for tax year 2021. So when you go to file a tax return in 2022 for tax year 2021, on that tax return, the child tax credits have been increased. So if they are a dependent that's 5 and under, the tax credit is $3,600. If they are over 5 through age 17, then the tax credit is $3,000. So for 2020 and before, it was $2,000 for a tax credit. So that's the first thing that's happened here, is that the child tax credit has increased, as I had just indicated to you. So what is it that's going to be mailed out? July 15th forward, the IRS is then going to advance this child tax credit. What that means is that this would be something that you are qualifying for. It would be something that goes on your 2021 tax return, this tax credit, but they're going to send it to you in advance. What does that mean? On your 2020 tax return, you're going to show, here's this dependent. If you have a dependent that's age 4, you're going to have a $3,600 child tax credit. Yes, there are various limitations to that, but there's only so much time in this video. But for $3,600 of that credit on that child, starting in July, they're going to start doling out $300 of that towards that tax credit per month. So on somebody that has a 4-year-old dependent, and the IRS is aware of it, then in July there'll be $300 paid to those parents that are claiming that dependent, or those taxpayers that are claiming that dependent. So $300 in July, and then $300 each month through December. If you're doing the math on that, 6 months times 300, that would be $1,800 paid in advance to that person. Then when they file their 2021 tax return, they'll show that they get the tax credit of $3,600, but they already received $1,800, and then they would get the rest as a tax credit on the individual tax return. It's the same math if you are a dependent, you have a dependent that's over age 5, but it's just $3,000 tax credit. They'll start advancing $250 a month starting in July. There's nothing you really can do about it. They're either going to send it to you or they're not. If you want to make sure that you're in on it as soon as possible, then make sure you have filed your 2020 tax return. Yes, there are income limitations to it, just like before. But that is not a forced stimulus check. It is in essence a tax credit that you may qualify for 2021, and the IRS is just sending you the money in advance. That is not a stimulus check. It may feel like one, but it's not. And I also don't feel that it is plausible there will be a forced stimulus check anytime soon or this year. Now, as we talk about the child dependent, care credit. So for those of you that have child care expenses, you're already familiar with this. This isn't a new tax credit. So if you have a child and you're paying child care tax, or you're getting the child care tax credit, you're going to be familiar with this. But three things have happened for 2021. That's tax year 2021 that you'll realize the benefit of when you're filing the return in 2022 for the 2021 tax year. But three things have happened. First, they have increased the amount of expenses that can be included for the dependent care tax credit. So they have increased it to $8,000 per child. Previously, it was up to $3,000 of expenses per child. Now it's up to $8,000 of expenses per child. Now, the total child care expenses that can count is $16,000. So you can run the math out on that, but long story short, this is a lot more dependent care expenses that can be included. Now, when you're determining the tax credit tax or percentage has increased as well. That's the second thing that's happened. Previously, it was 20%, and depending on what amount of income you had, it kind of had a bell curve to it, but nonetheless, now it's at 50%. So if you have a dependent, you're paying dependent care expenses, and you have $8,000, you're now looking at a $4,000 child care tax credit. That is huge. The other thing is, the third aspect is that they have increased the amount of income that you can earn before that credit starts to phase out. The big thing to note, especially for those of you that already have this, if you have pre-tax benefits through your employer, Section 125 plan, a cafeteria plan, you'll want to get with your HR, get with your employer to see about increasing the amount that's being withheld from your check, that you can get the benefit of pre-tax, because there's now more dollars that you're able to run through on this. At the end of the day, this is a great thing, especially for those that are having to pay those additional expenses. I'll be brief on the employee retention tax credit, which is just to say this: if you have employees, you're going to be missing the boat if you don't at least take a peek at this for 2021. It's applicable all 4 quarters of 2021. It's based on payroll in terms of how you calculate the credit, but it's much easier to qualify in 2021. Yes, you can qualify if you are a business that has a governmental shutdown, but put that aside, because gratefully that is becoming far and few between. The biggest way that you could potentially qualify for this, maybe not even knowing it, is that in 2021, you take your gross receipts for the quarter in 2021, and I want you to hear this part. You compare it to the same quarter in 2019. Hear that properly. You compare the quarter of 2021 to the same quarter of 2019. And if your gross is down at least 20%, then you qualify for the employee retention tax credit. Here's the thing, that is quarter by quarter. So you have an opportunity potentially to review and see if you qualify each quarter. Now, for first quarter 2021, hear this. There are 2 ways that you can qualify for it. Yes, comparing first quarter 2021 to first quarter 2019, but also you can compare fourth quarter 2020 to fourth quarter 2019. And if either one of those things puts you at a 20% decrease in your gross receipts, then you qualify for first quarter 2021. This is amazing tax credit, if you will, because if your gross receipts are down, then the wages for the entire quarter that are paid in that quarter, as in incurred in that quarter, qualify for this credit up to $10,000 of compensation per employee, and that includes the employer-paid health insurance. So the tax credit percentage is 70%. So if you were to have 6 employees and they each made $5,000 in a quarter and you were down, then all of your wages for that quarter would qualify if you're 500 or less employees. And you would then take that compensation times 70%, and that is your tax credit. There's multiple ways to get it. I have a seminar I'll put a link to it. I've done 2 seminars you can have instant access to. I've got Excel spreadsheets that run you through the calculations and the ins and outs and how to prepare it. You can get it by filing a Form 7200 to get it in advance. You can reduce down a payroll deposit. You can also file a credit with your Form 941, or if you missed all of it, you have about 2 years, maybe even really 3, to file a Form 941X. There's going to be millions and millions and millions of businesses that are going to miss out on this tax credit. So take a look at that. The other aspect is that the sick and family leave tax credit is alive and well through September 30. A lot of people aren't paying attention to this one, but there still are those out there that are with COVID or caring for those with COVID or have COVID conditions or symptoms. So if you, even the self-employed, or you have employees and you are paying compensation to your employees that are out related to these, you get a tax credit for that. It's pretty amazing because if they have COVID, you get a 100% tax credit for their amount of compensation for the day, up to $511, max 10 days. If they're caring for somebody with COVID, you get up to a $200 per day tax credit, no more than what you pay them for the 10 days. And the thing is that resets on April 1st, meaning if you had that with an employee in the first quarter of this year, and then it happened again in April, May, June through September, you would get that credit. Again, these are payroll tax credits. They're getting overlooked and they're getting missed. I know the IRS has a lot on their hands. I don't really feel that they've done enough to get the word out there on this. And because of the brutal tax seasons, a lot of CPA firms, EAs, and tax professionals haven't really had time to talk with their customers about this. So you need to be reviewing this, follow up with your tax professional, and make sure that you're getting the tax credits that you have coming to you. So I believe that we have covered everything in here. I'm going to put a link to each one of these items to the direct source, and that way you can get more information. So what I would encourage you is that if you have a question, it probably really would be better to just find the link, go to it, solve the question that way. Better yet, get with your professional, get a conversation going with them, get your hands around these things. These are complicated things. These are things related to the government. The purpose of this video is to give you a taste to then go, well, maybe that does apply to me, so that you can go back and get with your professionals to take advantage of these. I talk a lot about that in my first book, JJ the CPA, here, that you can get on Amazon, which is get good information from those of us that are putting it out there. But then on these things, maybe not so much do it yourself. Get with your professional. Maybe you're going to help guide them. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.